Hello everyone, a very warm welcome, and thank you so much for coming to watch this video.
It's great to be here.
Today we are digging into the TRX Gold Corporation Q1 FY2026 earnings call. It took place on January 19, 2026, and, well, it's a wild time for the gold market.
It certainly is, and TRX is definitely making some moves. To kick things off, let's just summarize the prepared remarks from CEO Stephen Maloney and the team.
Okay, where do we start?
Well, the headline is really financial strength, and it's all being driven by these record gold prices. They reported record Q1 production of roughly 6,600 ounces.
Wow.
Yeah, and that translated into revenue exceeding $25 million. Their adjusted EBITDA was over $13 million.
And hold up, for anyone who doesn't live in spreadsheets, adjusted EBITDA, that's basically their core operating profitability, right? Before all the accounting choices.
Exactly. It's a very healthy number. They realized a gold price of, I think it was $3,860 an ounce in the quarter. But they made a point of saying the market now is sitting over $4,600.
A huge difference.
A huge difference. On guidance, they reaffirmed their targets for FY 2026. So that's 25,000 to 30,000 ounces. Cash costs between $1,400 and $1,600 per ounce.
Okay, pretty standard stuff. What was the real story?
The real story is their strategy. The plan is to expand the plant significantly over the next 18 to 24 months. And here's the key part. Using only internally generated cash flow.
So no asking the market for money. That's a big statement of independence.
Precisely. No external funding. They keep emphasizing they have an 18-year mine life, and they're transitioning from open pit to underground.
And operationally?
They've built up a massive stockpile, over 22,000 ounces, sort of as an insurance policy. They're also investing heavily in plant upgrades, specifically new thickeners and oxygenation.
Oxygenation. Sounds technical. Why does that matter to an investor?
It's all about recovery and just helps the chemicals react better with the ore, so you pull out more gold. It's about squeezing, more juice from the same orange.
Got it. Okay, let's get into the Q&A session. That's where you really get the details.
For sure. The first analyst up was Heiko Isle from H.C. Wainwright.
Right. What was on his mind?
He asked about potential bottlenecks, during the plant expansion and whether labor cost inflation would be an issue. He also asked about head grade improvement.
Head grade, meaning how rich the ore is. So how did management handle that?
They were pretty reassuring. They said labor costs are stable. They aren't really seeing significant inflation there in Tanzania. And the expansion is more about efficiency, so better equipment, not just adding more people.
Okay.
And on the grades, this was interesting. They're installing a new pre-leach thickener in April. They expect that one piece of equipment to give them a roughly 5% lift in the mill head grade.
It's a very tangible upgrade. What was next?
Next were some text questions submitted online. The CEO read them out.
And they covered
A few different areas. The increase in plant utilization, which hit 90%, future strip ratios, risks around their new tailings facility, TSF3, and their marketing efforts to high net worth investors.
Okay, that's a lot. Let's talk strip ratio for a second. That's just how much waste rock you have to move to get to the good stuff, right?
That's it. So a high strip ratio is expensive.
So how'd they answer that whole batch of questions?
Well, the high utilization, they said, is down to better preventative maintenance. Keeping more spare parts on hand. Simple stuff, but effective. On strip ratios, they basically said it varies to maximize net present value.
So they do what makes the most financial sense at the time.
Exactly. For the tailings, they're doing a lift on the existing TSF2 facility, which just means adding height. It reduces the immediate risk while they design the permanent TSF3.
And the marketing question. I feel like this is a big one for shareholders worried about dilution.
It was. And the CEO was very clear. He emphasized they will not offer discounted private placements just to attract big investors. He was blunt, really. If they want in, they can buy shares on the open market like everyone else.
That's a rare level of confidence.
It is. They're protecting the share count.
So if you had to bring it all together, what are the main themes here?
I'd say the main theme is self-sufficiency. TRX Gold is using these incredible gold prices to self-fund their growth. They don't want to dilute shareholders.
Right.
And their operational efficiency is clearly getting better through these technical upgrades. And management just seems very confident in that 18-year mine life and the exploration potential.
It sounds like a company that's betting on itself and, well, the market is definitely giving them a strong tailwind.
That's a good way to put it.
Thank you all so much for watching. If you found this update helpful, please click like, share the video with someone, and make sure to subscribe so you can stay tuned for our upcoming content. We'll catch you next time.